to Billionaire. This is Nifty's weekly analysis video. In this video, we'll try to find out the levels for next week and next session as well. So stay tuned, and here we are going to do the analysis based on price action and indicators first. Then we'll check the Elliott Wave, and at the end, we'll look at option chain. So before we do the analysis, let's understand what we discussed in the previous week. In the previous week, we expected that it will make one more low and then will bounce back on the upside. So I think this was the chart. Yeah, this was the chart from 14th Jan that we discussed, that Nifty would drop towards this. It is making a falling wedge and then will give a pullback. But Nifty opened small gap up in next session and then fell on the downside and then started the pullback. So it looks like the low is already in place, and this chart is a little bit different now, and the wave count is changed. So we'll discuss the Elliott wave count after we discussed price action and indicators. So let's jump to the price action and indicators first. On price action and indicators, you can see here Nifty is trading in this range for quite a while now, almost I think month. It's 26th December where it made this low, and after that it is still trading in a small range. So this is the range where Nifty is trading. So let me move this line here. So this is our range, you can see. So this is where Nifty is trading right now. As you can see, it has started the fall and trading in the range. So this means that there could be a chance of drop someday after completion of the pullback. Around indicators is still at extreme bearish. Red line above 70, green line below 30 is considered as extreme bearish signal, and RSI is below 50, which is considered as a negative signal as well. Here Nifty 2 days saw a selling pressure and it faced resistance near 18,180 levels. So 18,180, 130 and 150. This is very a big resistance. So Nifty is not able to cross that. So next time it attempts to cross that, it will cross it with the gap. Okay, it will open gap up above this level, then only it will be able to cross this zone. So just remember that. And now what is happening is it has pulled back up towards a short-term moving averages. This is 48 EMA. Now Nifty is trading below 48 EMA again. It was trading between 13 EMA and 100 EMA, and now again it has broken 13 EMA. So now next, like it's most likely that it will head towards 100 EMA, this white line, which is nearly at 17,900. So most likely in next session we should test this and then should have a bounce back on the upside. On upside, it might give some gap of openings and reach towards 18,500. So budget is around the corner. So in next week we should expect it to head higher. So budget is coming in next month. So yeah, it should be bullish for a couple of days until it's exhausted its move. It will go like this and then will drop. Okay, so this is how I'm expecting as per the price action as well. So right now you can see 13 EMA has crossed 48 EMA. So trend should remain bearish. It should pull back. It should trend in a range. It should give a pullback and then should drop. So this is how I'm considering Nifty's move based on price action and indicators. Let's check the Elliott wave. We discussed a couple of patterns in Elliott wave. So this was the pattern that we discussed, that Nifty has completed wave 1 here and now it has started third wave. So now we have to consider this as an expanded flat correction of wave 2. So it will take us towards 16,700 to 500 levels, and then we'll have higher high going on the upside in a third wave. So this is the chart that we discussed. We discussed long-term targets as well of the Nifty. You can visit our channel and watch the video. So do make sure you hit the like button and subscribe to the channel. It takes a lot of effort to create this video, and do make sure to help us reach to the larger audience. So this was the first case that we discussed. Then this is a little bit detailed chart of the same view where we are explaining that this is a 3-wave move on the upside, then we'll have a 5-wave move going on the downside, and then we'll have again a third wave going on the upside. So this is how we are expecting Nifty to move. And this is the second case. Here we explained that this could be a leading diagonal structure with wave 1 completed here, 2, 3, fourth currently is in progress. And after the fourth is completed, we'll have a fifth wave. Then we'll have ABC going on the downside. So this will be a boring case. Then again, after this will shoot higher. So it will take a lot of time for this case to happen. And this is not confirmed until the fifth wave gets completed. So let's check the drop from the top. So we are right now assuming that this case is in play. Okay, so I'm more inclined toward this case, looking at this three-wave structure going on the upside, and then we have started the drop. So considering this drop has started as a wave C, so this is the chart that we discussed as well. 1, 2, 3, 4, and fifth wave. It did made a low below 17,774, and the low was 17,661. This was the low Nifty has created. So it has came down in 5 waves, and now it is going to give a pullback in ABC. So other charts that we discussed in 8th Jan were like this and this and this. So these are not useful now. Let me delete them. And this cases we already discussed. So even this got invalidated, but we'll keep this for a reference that we discussed something like this. So now in the next week, we can assume that it has started the pullback. It will give one more dip and it will go up. So here, as I said, 1, 2, 3, 4, and fifth wave. So fifth wave was ending diagonal structure, which ended at 17,761. So I have labeled this wave counts as wave 1 of fifth, 2, 3, 4, and 5. So fifth of fifth is a truncated wave. So let me show you here. So this is where I'm assuming that fifth is ended. So this is where I'm assuming fifth is ended. So fifth is ended. So it is truncated. This is the third wave's low. And here I'm assuming wave A, B, C. Okay. Okay. Or 1, 2, 3, 4. And if it opens gap up, then it will have a fifth wave. But this may not be the case because we have to again see what's happened in this wave. So we'll talk about that. So now, as I said, this is how I'm assuming the ending diagonal ended here. So now the ending diagonal will at least come to this level at the start of the wave, start of the ending diagonal wave. So we have to wait for that. And yeah, it will probably touch this 18,300. Okay. So anyway, after a drop, it will go up and then drop. Okay. So second chart is like this. This is for more like towards next session. We are discussing for next session. So as I said, fifth wave ended here, and I'm assuming this as A wave, this as a B wave, and wave C could be ending diagonal structure as well, or 1-2-1-2 formation. So we don't know that, and we don't care about that right now. Okay, so we will talk about the bullish case once it breaks 18,144. Until that, consider there is a dip pending on the downside, one more dip pending on the downside, because here you can clearly see this is wave A, this is wave B, this is wave 1, 2, 3, and we'll have a fourth wave. A small pullback can be there towards 18,065, and then one more drop could be there. It could make drop near 17,980 or 17,900. It can go even deeper as well. So just remember that it can give a pullback and it can start the dip. What if it goes up or if it opens big gap up? So break up this level 18,087 will invalidate this wave count of drop. Okay, so this wave count of drop will be invalidated if Nifty opens above 18,087. So if it opens above that, then let it break this high 18,144. Then we can consider that this swing high is broken. Okay, the swing high is broken, then that is the case for a bullish case could have started. Then it can move towards 17,500. Why 17,500? Let me tell you. So you can see here, this is how I have plotted Fibonacci on this 0 and the low point. So I get 0.32 Fibonacci as 18,191. Nifty has reached toward this. So what I'm expecting is it can pull back and then go towards 0.600 Fibonacci, okay, which is near 18,450 to 18,500. So budget is going to come. So next week will be a volatile week. Options will have a more premium and sellers could get trapped. So it will be a volatility increase. When volatility increases, option sellers do not have a good win ratio. Option buyers will gain more. So yeah, next 1 or 2 weeks, we should see an action towards 18,500. So that's the range that I'm giving you. So that's all on the Elliott Wave front. We'll check now option chains. In option chain, clearly 17,900 is major support. Here we have 64.6 lakh and 18,000 is a second major support. So these are the two major support. 17,800 is a major support. On put side, whatever number is biggest, that will act as a support. So on option chain, 17,800 is a major support now, and second major support is at 18,000. Okay, so this is second major support. So this is how you should identify support and resistance for this week's expiry. Another thing, 18,100 here is acting as a major resistance. On call side, which is on call side, whatever number which is the biggest number, that will act as a resistance. So this is the major resistance first, okay, and then we'll have 18,200 as second major resistance. Okay, so this is how the major resistances are and major supports are looking like. So 17,800 to 18,200 is a range for this expiry. Nifty might expire between these range, and if it goes down and starts again coming back up above 18,000, so let's say it makes one more low near 17,900 and then again closes above 18,000, that will create a short covering rally, and these call writers or these sellers could start exiting. Then we'll have a rally towards 18,500. So usually in the multiples of 500 and 1000, there will be a major expiry because that is a whole number. Not major expiry, but that is where you will see a most open interest added. So 18,500 could be the next target in this week's expiry or this monthly expiry or next week's expiry. By the next week's expiry, we should see this number 18,400 to 500. So that's all on the option chain. One more thing I want to tell you here is based on info that Nifty is having low PCR. Put call ratio is very low. Implied volatility is also very low. This is not good for option buyers, and this is also at extreme low. IVP is less than IVP when it's near to zero. It's considered as there could be a potential reversal coming in. At the money IV is more than IVP, and yeah, IVP ranges from 0 to 100. So at 100, it will be extreme volatility and extreme bearish cases. But here there is a chance of reversal, and max pain is also showing as 18,100. Max pain data works well near the expiry. But yeah, these three things, PCR, IVP, and at the money IV, these are telling that there could be a potential reversal. So at least we can expect 18,500 in a this week or next week. Okay, that's all I had to say. Thanks for watching. Do make sure you subscribe to the channel and add the comments if you have any. You can ask any doubts to us. We'll be happy to help you. Have a great day. Have a great weekend. Bye-bye.